Dirty dealings, corporate battles, consumer wars. This is Evening 5. Genting Malaysia said indirect wholly owned subsidiary Genting Americas Inc. has been named in a complaint filed by RAV Bahamas in a court in Florida. Genting Americas is involved in the operations of loss-making resorts World Bimini in the Bahamas, which is owned and operated by BB Entertainment. Genting Malaysia indirectly controls 78% of BB Entertainment, while RAV Bahamas holds the remaining 22% stake. Genting Americas is an affiliate company of BB Entertainment. According to Genting Malaysia's bourse filing, RAV Bahamas is seeking damages of over $600 million, approximately 2.57 billion ringgit, but the specifics remain undisclosed. It said the complaint is baseless and totally without merit and pledged to vigorously defend against the complaint. Last Wednesday, Bahamas news portal The Tribunal reported RAV Bahamas in its lawsuit claimed that Genting Americas, which controls BB Entertainment's finances, has used BB Entertainment as its financial wasteland by dumping on it almost $1 billion in debt. The lawsuit reportedly said through its stranglehold over BB Entertainment and its finances, Genting Americas has used BB Entertainment to conceal a medley of fraudulent activities, leaving assets contributed to the venture by RAV Bahamas as essentially worthless. Capital A shareholders have given the approval to the proposed disposal of its aviation business, worth some 6.8 billion ringgit to sister company AirAsia X. 99.97% of shareholders and proxies voted in favour at the company's extraordinary general meeting today. The corporate exercise intended to facilitate Capital A's exit from PN17 status is now pending the approval of the shareholders of AAX at its EGM in 2 days' time. The other key resolution involving the distribution of AAX shares, or 73.33% of the total AAX shares that Capital A would receive from the proposed disposal to its shareholders, was also passed with 99.97% voting in favour. Capital A Chief Executive Officer Tan Sri Tony Fernandez said that it was a great day for the airline group and that after 5 long years of COVID, I see light at the end of this dark tunnel. He went on to say that the group is almost at the finish line. If the proposal gets the green light from AAX shareholders, then it will create a very powerful aviation group and Capital A, which has huge potential growth. Malaysia's better-than-expected economic growth and strengthening ringgit has given the government more room to manoeuvre towards its fiscal consolidation targets, Economy Minister Rafizi said, easing the pressure to rationalise the subsidy for the RON 95 fuel this year. Rafizi did not say if the plan to trim the blanket petrol subsidy will be announced in the upcoming Budget 2025, telling reporters it would be best to wait for the tabling of the National Spending Plan this Friday and subsequently the months after that because certain things have changed. He did say there is less pressure on subsidy bills and that Putrajaya has a few policy options it can adopt in order to make its public finance a lot more sustainable. The World Bank last week said that the government will have to cut its petrol subsidy expenses by this year to meet its own fiscal deficit target of 4.3% of gross domestic product for 2024 from 5% last year. Putrajaya, which had in June removed the blanket subsidy on diesel in Peninsular Malaysia, has yet to announce the timing of the subsidy rationalisation for the RON 95, currently capped at RM2.05 per litre. The federal government's financial performance in 2023 improved over 2022, with excess revenue increasing by 2.028 billion ringgit, according to the Auditor General's report. The report noted that Putrajaya's deficit shrank by 8.595 billion ringgit, reducing the deficit to gross domestic product ratio to 5.0% in 2023 from 5.5% in the previous year. However, it said the government needs to pay attention to the increasing trend of federal liabilities, consisting of federal debt and financial liabilities, which increased by 92.038 billion ringgit or 6.6% to 1.492 trillion ringgit, compared with 1.4 trillion in 2022. Additionally, the government's guarantee commitment for 13 companies rose by 3.288 billion ringgit or 1.5% in 2023, compared with 224.116 billion in 2022. Meanwhile, dividends received by the government significantly fell by 9.756 billion ringgit or 17.5%, down from 55.815 billion ringgit in 2022. The AG's report, which was released today, also highlighted that Putrajaya has forked out a total of 39.74 billion ringgit in guarantee commitment grants to repay 1MDB debts from 2019 to 2023 and will need to set aside another 9.46 billion ringgit to repay the remaining debt balance. Sarawak telco firm Reach 10 Holdings is seeking to raise funds through an initial public offering on the main market to fuel expansion and build more towers. According to its draft prospectus, the tower firm is planning to expand its fibre optic infrastructure in Kuching and establish 3 more networks in Miri, Sibu and Bintulu. The proposed IPO involves a public issue of 200 million new shares and an offer for sale of 100 million existing shares. All in all, the listing offers investors up to 30% in the firm. Separately, real estate developer SPB Development is also pursuing an IPO on the main market to raise funds to acquire more land and finance existing projects. It is conducting feasibility studies to expand its land bank in Selangor, Penang, Kedah, Melaka and Johor. It has not started any negotiations for the land acquisitions. Part of the proceeds will also be used as working capital for upcoming residential development phases in Lunas in Kedah and Banting in Selangor at an estimated cost of 210 million ringgit. The proposed IPO involves a public issue of 191.1 million new shares and an offer for sale of 87.3 million existing shares. This could potentially result in investors holding up to a 30% stake in the Melaka-based company.